Hey guys, thank you so much for watching this video. Please give us a call if you guys are looking to improve your credit score, lower your car payment, buy a car, trade in a car. If you're looking to purchase your first home, if you're looking to purchase a rental property, we can help you. Give us a call today, 877-205-7771. Talk to you guys soon, and thanks again. Hello everyone, this is Calvin Russell, CEO and founder of 850 Club Credit Consultation. Hope everyone is doing well today. Today we're going to talk about how to have two mortgages at the same time, okay? It's actually easier than you think, and I'm going to show you guys how easy it is, pretty much how I did it on, like how we lined up the loans, my wife and I, with our two homes. And the reason why I say that is because, of course, there's two ways that you can go with a home. There's a lot of ways that you can go with the home, but for the most part, most people are going to be either going conventional or they're going to be going FHA. Okay, and now if you go FHA, of course, you only have to put down 3.5%. And if you go 3.5%, that's an easier down payment to come up with. Now, what's also great about FHA is that you can go up to 4 units. Okay. So I'm assuming that that's national. I don't know if that's like just an Illinois thing, but I'm assuming that that's national to the best of my knowledge. And the reason why I say that is because if you go into a multi-family building, let's say for example, like we did a 2-unit building, and that way, the first floor pretty much takes care of the mortgage. And then if you go with on the second floor, that second unit, you're able to, that's where you live, of course. So now you're saving the largest expense that most people have, which is a living expense. And depending on, where you live, how much rent normally costs, or a mortgage in that case. But again, if you're making that transition from renting to owning, you're probably in the neighborhood of somewhere between $800 a month to about $1,800 a month, just paying rent, right? So now if you don't have that large living expense anymore, you're able to save that money. And that's exactly what we did. We saved the money for about 3 years, and then we took a portion of the money we saved and then went into the second home. Now, when we actually got the second pre-approval, they actually started to count the rent from the other building, even though we had not yet found a tenant. Okay. Now, in order to close on the loan, again, everyone's situation is going to be different. Income is going to play a role, or something like that. I think at least making $30,000 or $40,000 a year, you should be able to make that cutoff. And the reason why that is, they want to make sure that you can actually handle both. And again, if you already have that lease agreement on the first floor from building number 1, of course, that's the original home that you end up buying. If you end up going that route, then of course it breaks even. So having someone at that top floor or in the other unit, depending on how you got it set up, that money will then be applied towards the next the next home. Now again, you can do whatever you want to do with the money, but that's how the bank is going to look at it. The bank is going to look at it as an overall risk factor, and can this person afford to pay both mortgages essentially if both the tenants are late. Okay, and so all that goes into the thought process of, well, actually the loan process of getting you approved. Okay, again, income's going to play a role. Credit's most definitely going to play a role as well too, because again, with that second loan, 9 times out of 10, you're going to end up going conventional. Now, there's nothing wrong with going conventional. Of course, most conventional loans are going to require that you have 20% down, but then again, you also can do 10% down as well too, and some lenders will even let you go as low as 5%. And again, everyone's situation is going to be different. Student loans are going to play a major role for a lot of you, so that's going to play a role in how much buying power you actually have. And then some people, they would rather go into a single family home first. So if you go that route, you just have to save the money up to go into another building. It doesn't necessarily have to be a multi-family building or whatever. It's really up to you on how you want to do it. And there's multiple ways to buy another building. It's more so getting approved for the qualification for that. And again, we had to get a lease signed and dated from the tenant before they moved in, just so we can close. So of course we started the process, getting that going, and we still had not yet moved. So it was like, hey, this place will be ready next month. We're prepared to close on the other home around this time. We're going to need security deposit. So pretty much it kind of accelerated accelerating the process maybe about 2 to 3 weeks in advance. So versus where, but again, depending on if you're a landlord or not, if you go with that multi-family unit building, that's what we decide to go first, and then go into the single family home. And now we use, of course, that income from the top floor for whatever, and then of course you have that first floor, covering the mortgage. And again, it won't be like that forever. Over time, that building will actually pay itself off, and then once that building pays itself off, then of course that'll be just 100% income. Okay, so that's the easiest way to actually get approved for 2 mortgages, is if you start off with that FHA, take advantage of that 3.5% down. You can go up to 2 units. You can go up to 4 units. Of course, we did the 2-unit route. You can go 3 units, 4 units, however you want to do it. And that's the easiest way to do it, to be honest with you, to save that money. Or if you start off in a single family home, there's nothing wrong with that. Again, the question is, how fast can you come up with that conventional loan? Okay. Now, some people have always said, hey, what if you just refinance from a FHA to a conventional, just so you can free up another FHA? Okay, because you can only have one FHA per social. And then another thing too, to get FHA, for the most part, they say it's supposed to be owner occupied. Again, not going to go into the lending side, because really, honestly, at the end of the day, all that really matters, so I would think, but again, I'm not a lender. The only thing that really matters is, can that person afford to pay the mortgage? Do they have someone, physically living there? Is the lease agreement real? Things of that sort. So all that plays a role into it. But I'm telling you, getting a second mortgage is easier than you think, especially if you have another lease that's going to be signed, because they can apply a percentage of what the projected income may be on a monthly basis, and they apply that to your pre-approval. So that gives you more buying power. Okay, and so just something to think about. I know I get that question sometimes, and just so you know, you can actually have up to 10 buildings per social. But then again, that's going into a personal side, and then of course, if you end up creating a business, then that's a little bit different. So, but more on that, a little bit later throughout the week. But that's the easiest way that, of course, I recommend you do it. Not just because that's the way I did it. Of course, I always try to speak from a level of experience, but at the same time, you're going to be able to save that money a lot faster if you go that route. So, but either way, hopefully that was helpful. And if you like this video, go ahead and give it a thumbs up. If you want to share it, be sure to share it. And as always, we always got great content on the way, so be sure to subscribe as well too. Thank you guys so much. Have a good day.